Good morning. Welcome to Almus Market Morning. Markets had much needed relief rally yesterday after peace overtures in Ukraine became evident in the European session. Quite expectedly, stocks turned around to the upside strongly. Oil dropped, and safe havens like yen, USD, and gold were sold off. Improvement in sentiment was so strong that markets even ignored the hot PPI number from US, which once again beat expectations by a big margin. It's not going to be all calm in Eastern Europe in one day, but at least the intentions for a peaceful resolution helps the sentiment. Soon, markets will be back to haunting prospects of tighter policy by global central banks led by Fed. Probabilities of a 0.5% hike in March have risen quite high, to be followed by at least 4 more hikes during the year. The only unknown is when the balance sheet reduction would start and at what pace. Only evidence of sustained high growth can offset the effect of these, of which we'll have some evidence in the retail sales and industrial production data tonight. Later, of course, we will have the minutes of January 26 FOMC, where we will get an insight of individual members speaking their minds on monetary policy, quantitative tightening, and inflation outlook. While many have already been speaking out at various forums on rate rise and the pace of it, we will be interested to hear about the timing and pace of QT. It's also a heavy slate of data from other countries, Eurozone, industrial production, UK, and Canadian inflation numbers. These are numbers which are important as we enter into a regime of policy normalization by major central banks. Rupee had a relief rally yesterday after reports indicated that situation in Ukraine was easing. Before that, we did see a new high at 73.71 for this cycle with strong imported demand. But it was also evident that strong offers were there from exporters ahead of key level at 75.80. Oil price falling more than 4% is good news, but it's still much higher than the levels assumed by government in their calculations. Given the high demand and the OPEC's restricted supplies, it is unlikely that we will see a drop too far. Immediate technical correction target for the rupee is at 74.95, and further moves will depend on news surrounding LIC and oil price trends. Thank you. Have a nice day.
Thanks, JK. So on a risk on scenario, 10-year USD yield moved again above 2% and now dealing at 2.03%, and whereas the 2-year USD at 1.56%. We are seeing now kind of a steepening of yield curve, and yesterday long-term yields rose more than the short-term yields. Today morning, most of Asian currencies appreciated on a risk on sentiment, mostly led by Korean won and yuan, which is basically around 0.3% higher. Brent crude oil moved lower by 3% to $93 per barrel, but shall be supported around 91.40 or 92 area per barrel on a tight inventory conditions in US. 10-year GSEC yield, Indian GSEC yield closed unchanged at 6.68%, even after the cancellation of auction. That basically means it will be supported by 6.65% on a lower side and shall move towards 6.75 during this week. Gold is acting as a risk of assets, which fell by 2% on a risk on sentiments to $1840 per ounce, and now dealing at 1852. Whereas the Bitcoin moved higher by 5% to $44,000 per unit due to risk on characteristics. That's all. Thank you. Have a nice day.